All right, guys, welcome back. Another trade recap for today, Wednesday, October 23rd. So today, we actually ended up getting that sell-side liquidity on ES, that same level I was aiming for yesterday in our trade. So I'm going to break that down for you and show you how I executed and what my thesis was. So as you can see, we formed this SMT with the NASDAQ, right, yesterday, like we talked about, running above this last week's Thursday high. So if I pull up a NASDAQ chart alongside the CS chart, you're going to be able to better see that SMT divergence that we formed at that previous daily high. Okay, so here's that Thursday high from last week. NASDAQ makes a run above it, right? ES fails to do so yesterday. And then you can see coming into the session, my eye was drawn into this sell side liquidity. Now, this sell side liquidity was an objective for me because it not only was equal lows on our daily chart, as you can see here, but it was also this weekly internal range of liquidity or buy side imbalance, sell side inefficiency, right? You can see that weekly fair value gap that is nested right in there. So how did I approach this thesis and where did I take my entry? So coming into the session, I had one key level in mind. As you can see on our 4-hour chart, we had this inefficiency of market price in here, which is a 4-hour internal range of liquidity, right? And we can see that price failed to offer fair valuation within this area of interest. Now you can see that on this 6 a.m. candle close through this inefficiency, right? And generally speaking, like I talked about last week, if price fails to offer fair valuation inside of a displacement leg, then the low that created that internal range of liquidity, the ERL, becomes the short-term draw on liquidity, which of course was a failure swing to this higher time frame draw on liquidity or double bottom that we had on our daily chart. So that was my invalidation of this key level in here, right? This 4-hour internal range. And that set the stage for me to look for shorts in the New York session as a continuation into that sell side liquidity. So let me go down to my hourly chart and we can look at how the London profile formed, our protraction profile, and then how we traded the New York continuation. So as you can see in London, we came above these hourly highs, right, and stop hunted, forming the high of the day, presumably during this London session. So this is considered a classic London protraction, which makes this the high of the day in a classic sell day. So what we're looking for and what we're hunting for is a New York continuation, okay? Moreover, right, as this 10 a.m. candle closed, we also got the additional information of the market in this change in the state of delivery. So again, a change in the state of delivery is the consecutive series of up-close candles into our key level that forms divergence. So as you can see on the ES, we got this change in the state of delivery, right, with this 10 a.m. candle lower, but we actually had that earlier change in the state of delivery right here on the NASDAQ, right, during that late London session at around 6 a.m. when we closed through these two candles here that formed that SMT at the previous daily high and Thursday's high. So that was an indication of bearish order flow on the indices and another, confirmation that this 4-hour gap was not going to hold, for example. Now, how did I align myself with this order flow? Well, because I was looking to trade a continuation of order flow, what I wanted to see was once this 4-hour internal range started to get displaced through, I was looking for some sort of continuation model in the New York session, specifically aiming, right, for this sell-side liquidity. Let's go down to a 50-minute chart and analyze what that continuation looked like. So get rid of that internal range liquidity there. I can keep that on the chart, actually. So that was going to be our inversion fair value gap we expected to form, right, where this fair value gap failed to offer fair valuation. And now during that New York opening session, I was looking for some continuation. So on my hourly chart, I actually saw a couple of key levels. One, I saw this order block on NASDAQ, which is this up-close candle right in here, right, as you can see. In here, we have this up-close candle. And that same up-close candle is right here on the ES. In addition to that, right, once price traded back into there early on in the New York session on NASDAQ, what I saw was I had this 15-minute inefficiency right in here. So this was a sell-side imbalance, buy-side inefficiency. So I saw this fair value gap as a key level that overlapped that order block, right? And I'm also going to mark out that same fair value gap on the NASDAQ. Right, again, nested inside of that hourly order block. So what you can see on the open, right, equities open, is that we come in and we perform a stop hunt of that high on the NASDAQ, right? So we come back in and we rebalance this inefficiency with institutional order flow entry drill on NASDAQ, or we come one tick into it, I think 2 ticks actually. And on the ES, we leave these equal highs, okay? So I'm going to get rid of this box, which is the gap, and you can see how we come into that gap on NASDAQ and fail to do so on the ES, forming a divergence inside of this PD array, inside the context of this hourly continuation level. So once that happens, I hop down to a 1 minute chart, right? And what I'm waiting for, again, my entry technique is going to be a change in state of delivery. So what I want to see is the consecutive series of up close candles into this key level, which forms divergence. So again, to recap, there is the SMT divergence inside of our key level. We put in equal highs on the ES, and we create a higher high with a wick on NASDAQ. Once price closes through the consecutive series of up close candles right here, that is my entry function. So what I did was I took a short at that change in state of delivery level, risking those highs, right? And then, of course, targeting my draw on liquidity, which is going to be this low, right? And as you can see, price came extremely close to this level of invalidation, right? Performing another stop hunt, right? Above these short-term highs. Same here on ES, but it did not come into my invalidation level. And then price dropped down into our daily sell-side liquidity objective, right? On our 4-hour chart, you'll be able to see. Price declined into our daily sell-side liquidity and even came as low as this 4-hour and daily liquidity down here. So ultimately, that was the trade I took today, right? I posted my executions just recently on Twitter. You can check them out. And let me know if you have any questions about today's trade. Awesome. See you guys tomorrow. Bye.